Hey everybody, it's Hussein Kabani, your favorite broker. And I hope you guys all know who this man is by now. We got Varan from Dominion Lending.
Thank you for having me.
Excellent, man. Thanks for joining us again. So periodically we have you on our podcast, and there's a lot of cool things that are happening actually in the mortgage space right now. And I think you're getting some people excited about making moves.
People are getting the momentum back.
Yeah, man. It's
people
just
are getting the momentum back.
We haven't seen this. I don't want to say it's crazy excitement, but we haven't seen this kind of excitement in a little bit right now.
Especially since summer was quiet, everything was kind of doing their own things. Like September comes, everyone's mind is shifting.
Yeah. Like I'll even just compare it quickly back to last year. Last year, around this time in September, I was expecting things to kind of pick up, but they never did.
Yeah.
But now, actually, I don't want to jinx myself and say that we're kind of going into a seasonality of a fall market, but it feels like that right now.
It feels like it. And the activities are happening. People, the momentum shifted. And I can measure on the calls that I get. It's actually significantly
You're getting
different.
more calls.
More calls, yeah.
Yeah. And you know what? I just quickly even ran the numbers from like September 1st to September 19th. And our sales are not like that much higher than last year in September. And last year, September wasn't a great month.
Yeah.
But we are slightly higher than we were even last year. So it kind of starts to show me that we have a little bit of, motivate. Like it's going in the right direction.
Correct.
And I guess like the first thing is that obviously rates coming down is fueling it, but I don't think it was like really, really helping with the first couple of quarter drops. But I think now that people see it happening consistently, I think people are getting the point.
I think this was a third drop. September was a third drop. It's a little bit different because everyone thought it's not going to continue to happen. So now it's a third continuous drop. And I think it's going to keep continuing to cut as well. They're predicting a 50 points cut. Especially with the 50 points cut from Feds, that's kind of give a confidence things are moving in the right direction. But there's a significant drop in fixed rates.
In fixed rates. So what are you kind of seeing them at right now?
Low threes.
Low threes.
Low fours.
Low fours.
Low fours, yeah.
I don't know. I did see one like that was even showing 399 for a 5-year fix.
Some online lender or brokers, they're doing the 399. It has so many restrictions.
Sure.
But with the major banks and institutions, it's low fours.
That's awesome.
It's actually not bad at all.
So compared to last year, do you have an idea of like what we were looking at?
Last year was low six.
Because I remember last year I got a 1-year fix. I think I got it for 6.79. 6.79.
That was a good rate.
At that time, it was really good. I was happy to get that rate at 6.79. It's incredibly high. But I think even now I renewed like maybe a few months ago, and I think I got like at least 1% lower than what it was.
That makes a difference, right? So this is what I always keep pushing. Clients are going to variable. And I think I still push clients to go on a variable as long as you understand the risk and the cash flow. It's a significant difference between a variable and a fixed right now.
Yeah.
But what this also leads is the rates are going to continue to come down. So kind of short-term pain for the long-term gain or opportunity cost.
Right.
You can still get a lower rate and convert the variable into a fixed.
Yeah, that was going to be my next question, actually. So the thing is that, like, where do you think, like, someone should, or, I mean, everyone's financial situation is different, right? But if somebody had, like, a variable rate, right, aside from having it at Scotia, there's still, despite the fact that more of the money is going towards the principal, it's still cash flow issues some people are having, right? So where do you think, if they start to see, like, a 3-year fixed rate come in, where do you think would be a good number to commit at? It's a loaded question.
It's a very loaded question, and also depends on how long you can tolerate a high rate and high payments.
Yeah. Say if you couldn't.
If you couldn't, I will wait till end of the year.
End of the year,
right? If you're getting low fours, high threes, probably by end of the in a couple of months.
Yeah. So if you got like a 3.75
half a point
or
cut
something
in October, and then maybe potentially a quarter point cut in December, I can see the fixed rates lands around mid threes.
So you would think that, hey man,
that's a normal rate.
Yeah, if you're kind of at a variable rate right now, despite the money going into principal, but you're paying like 6.5 points.
Yeah.
If you need to free up that cash flow, you're probably
you can convert right now. I think still
too
too premature right now.
Okay.
I will wait till.
Especially because we have this feeling that the next one could be a half. I thought maybe last month it would have been as well.
That was a prediction, but especially after the cut from US.
Yeah, it makes it a little bit more stronger to that direction.
More stronger. So I think we'll be in about mid threes probably by the end of the year.
So if we have the half and a quarter, then we're down 1.5 points this year?
Correct.
Yeah, 1.5 points.
Correct. Already 75 points cut, so it's
Yeah.
a point and a half.
Yeah, so it would be a point and a
And
half.
that's going to be continue.
That's going to be awesome.
But also, we are excited about the rate cut, but also
Sure.
we had to be a little bit cautious about the unemployment numbers as well, right?
Well, yeah, it's affecting everything. I mean, I think a lot of people are in a lot of debt. Not a lot of people, but there are people that are in a lot of debt, and it's going to bring some relief to them.
Yeah.
But obviously, at the flip side, the
Unemployment.
obviously the rate coming down is not an indicator that our economy is doing
Economy
any
is
better.
strong, so
Yeah.
so unemployment is a
Yeah.
huge factor. So that's something we need to be mindful.
Yeah,
as
makes
well.
sense. So other cool things have actually happened too.
CMHC.
Yeah, CMHC. Like, okay, so as far as I've always known, it was
I wouldn't
always
say CMHC. It's insured mortgages. There are
Insured
two-
mortgages,
I
sure,
don't want
yeah.
to. I don't want to hit on my other insurers.
For sure. Hey, but you know what, Vern? That is actually a good point, because most of the time when we refer to insured mortgages, I mean, for me, naturally comes up to CMHC. Like, who are the other ones that do insured?
So CMHC is
Yeah.
it's a government.
Okay.
It's a federal. It's a crown corporation.
Right.
And we have Sagen. It's formerly known as Genworth.
Oh, I know John Worth. Yeah.
And a Canada Guarantee.
Okay.
So these two are privates.
Okay.
And we always refer to CMHC as a crown corporation.
Okay.
So they all have the same guidelines,
All right.
but it depends on the lenders. Some lenders go to CMHC, some lenders go to Canada Guarantee. But they have a different same risk model.
Okay.
But it depends on the preference from the lenders who they want to work with.
Okay, fair enough. But there are other insured
Yeah,
mortgages
there's a
or
three
people
insurers.
that offer.
There's a
Okay.
three insurers in Canada.
So now what's happened is that the cap has changed.
Correct.
I always knew that it was a million.
999, yeah.
999, not even a
Yeah,
mil,
not
right?
even a
Just
million.
under $1 under a mil.
It's a
Because we've also sold property actually before. Somebody wanted to pay us like $1 million, and my
You had to
seller
drop it down to-
wanted that symbolic 1 million,
Yeah.
but they could only give us $1 short of a
because
mil.
of the insured.
Yeah, but we got $1 after the fact.
So the new changes is you can purchase up to 1.5
Okay.
with minimum down payment.
Right.
So what that means is for first 500,000 is a 5% down.
Yeah.
And anything between 500,000 to 1.5 is a 10% down.
Okay.
So technically you can purchase a $1.5 million per home with 125,000 down.
125. What do you think about that?
It's nothing. I know it's a big price point. I know it's a lot of leverage on the property with the premium, especially the CMHC premium as well.
Yeah.
And
I mean, wouldn't the CMHC or the insured premium
it's
basically
almost like
become your down payment?
98% loan to value.
Yeah,
on it.
it's almost basically
But it's nothing
what it
different
is.
than what we had $1 million threshold anyways.
Yeah, 100%.
So the risk, the loan to value is the same.
Yeah.
Either you are doing a 1.5 million dollar.
Yeah.
And keep in mind, if someone is qualifying for them, they have a really strong income. You need about 300,000 plus income to qualify for this purchase.
Yeah. And I guess maybe it softens the blow a little bit because of the interest rates are kind of coming down at the same time, right? Like, I guess maybe I would have had a little bit more of a problem with it if our rates were at 6 points.
Correct.
6 or 7 points,
Correct.
then that would be a little bit crazy, right? But if you start to see those rates, like we were talking about, come down to 3.5 or something like that, then it makes it a little bit more feasible.
Absolutely.
Yeah.
Absolutely. So what I will, the other important thing is also 30 amortization now.
And that was, I think the government initially basically said that for first-time buyers on new build, and now they've opened it up to resale.
Resales, yeah.
Yeah.
So which is a significant change as well.
Yeah.
It's a significant difference on the cash flow as well. So these submissions cannot be done till December 15th. So if someone who's viewing this, please be mindful. The lenders
Yeah.
cannot submit.
Don't try to
until-
close in 60
don't
days
try to
from
close.
now. Yeah.
We had a conversation with the client yesterday. It's a prime example. It's actually not for the first-time home buyers. If this is applicable for anyone who's buying a principal home.
Okay, so it's not first-time home
It's
buyer
not a first-time
only.
home buyer.
So
It's for any insured
So
mortgage.
if I have a condo and I'm just trying to buy a detached house
Perfect.
and I'm going to sell my condo, I can still go with the mortgage insured deal and then have a 30-year amortization.
Correct.
Whereas I could have only got 25 before.
Correct.
Okay.
So think about as an example, the client that we were in conversation last couple of days, great income.
Yeah.
They want to sell a townhouse for 775, 800. They want to buy something for 1.2, 1.3.
Sure.
They couldn't commit a 20% down. So they were thinking about, what's the point of selling and for 775, 800 and buying something for under $1 million? Either they go further
Yeah.
or they don't have an option. Now they're very strong on income. Now they can purchase something.
Yeah. And I guess by doing this as well, like what I understand will end up happening is that you're going to allow first-time home buyers and people that are moving up in the market to be able to buy that townhouse, to be able to buy that condo. So whoever has that townhouse or condo, they're going to be able to move up in real estate, right?
So it's also going to create a buzz, and also the transactions going to be happening.
Right.
So especially with the rates coming down, with these changes coming into effect, I can foresee a very strong spring market.
Yeah, because I think it's going to take a little bit of time to kind of work things through.
Correct.
So yeah, definitely, I think so. But just to back up for 1 second, so if somebody did a deal like say, October 15th, but they were closing December 20th, can they still do that, or that probably won't work because you can't even take an application?
So it's tricky. So I spoke to CMHC directly.
Okay.
They want. So let's say someone who bought a house on $800,000 purchase with a 24 amortization, they're closing on December 19th for sake. They can actually, the lender can go in after December 15th and see if you can change to a 30 amortization.
So would they have to rewrite the deal and resubmit the deal?
They need to get reapproved. I don't think so. There's going to be a problem on that.
No, because they're already approved at a higher...
Where we may see a problem is someone who bought a $1.3 million home with a 20% down. They may want to go and buy a 1.3 with a 10% down.
Yeah.
There could be a problem. Now
Sure.
it had to be subject to the full approval.
Of course.
So
yeah.
that may get tricky.
Yeah.
But going from a 25 amortization to 30 amortization actually is easier because your monthly payments are going to come lower.
Yeah. So Varan, if somebody is like saying, hey, these are great rule changes that are going to take effect December 15th, when do you think that they should be safely planning a closing date for it and make sure that they have enough time to kind of get through things?
I will say safe to say after the New Year's.
So maybe like aim for January
First,
10th or
January
January
10th,
15th kind of closing date?
Keep in mind, December 15th is the prime time of the holiday season as well.
True.
So it's going to be a lot of back and forth. And it's a new changes. We don't know if all the lenders are ready. There's going to be back and forth. There could be some technical difficulties, and you don't want to go through this. I will safely say have a closing in the New Year's.
And also, I have to imagine that people are going to take advantage of this. So they'll probably get flooded with applications at the same time. I'm sure the underwriters, everyone's going to get backed up trying to process these deals.
And this is also give us a lot of options right now for the consumers as well. If you think about it, you bought a property for $800,000. Now you had a credit card. Now you need to pay it on the credit card to get closed. Now you got a 30 amortization.
Yeah.
You don't need to pay the credit card because your cash flow or your
debt
ratios
service
will be in line, right? And also, there's a lot of monoline lenders. We always talk about the banks. There are great monoline lenders like a First NAD and MCAP. Now they have capacity to serve more consumers because right now they were kind of limited up to $1 million purchases.
Yeah.
Now you are open up to 1.5 because their niche is the insured mortgages.
Yes.
So this is also great thing for the consumers with the good rates, and also the penalties of breaking the mortgages with the monolines is significant as well. So that's also going to come into play as well.
That's awesome. So I think all of this very exciting. There's one more thing I saw. I think that's going to get implemented sooner than
November
later.
21st, which you are referring to is a no stress test on a switches.
Okay, because I thought they were like just going to do away with it.
So what happens right now? So let's say, for example, you mentioned your mortgage at CIBC. You want to move to TD for argument. You have to go through. So let's say your rate is 4.39. You need to qualify at 6.39. So going forward, if you're just doing a straight switch from one lender to another lender, you get qualified on an actual contract.
So what their offered rate is, right? Say, for example, I have a 6 points right now, but with CIBC, and then say RBC is offering me, 4.5 points. So I wouldn't have to qualify at 6.5 points. I would have to qualify at 4.5 points in order to get that deal.
Correct.
Okay.
Correct.
So I think that's probably going to help people, allow them to move around.
Exactly. So this was all this time MPC, Mortgage Professional Canada, they were lobbying for this. It's kind of putting a restriction on us. The banks were in upper hand.
This is going to be controversial maybe a little bit, but do you think by not being able to do this previously, the current lender was holding your rate higher on purpose, and they knew you had nowhere to go?
You may not be able to qualify.
Yeah, but you had nowhere to go.
But think about it. It's a significant difference qualifying on a contract rate and actual rate, stress test rate.
Correct.
It's a 2%. That's significant, right? And also keep in mind, Hussein, this is actually only for switching the mortgage. So keep in mind, this is not for the refinance. So let's say you have $832,000 on a mortgage, you have to move only $832,000 on the lender, not $900,000 paying on the credit card. This is only for
the exact amount.
Just a straight switch.
So the easier example, I guess, for me is that when my mortgage comes up for renewal, I have the option of shopping it around and getting the posted rate if I qualify
Yeah.
without having to go through the stress test.
Correct.
Okay. So this is actually opening up a lot of
Option for the consumers.
Yeah.
They can shop right now
Yeah.
because they don't feel like they're someone who qualified at 3.5% or 1.8% right now. They may not qualify with the stress
Yeah.
test. Now they can.
Yeah. So to kind of wrap this up, like let's call it next year spring, 2025 spring market. What do you see like the rate going to be? Like, what do you think that the rate's going to be if you go on a fixed rate? Because I think the fixed rate's going to seem a little bit more
I would
appealing,
like to
right?
say probably low 3s to mid 3s.
That's awesome.
Yeah.
That'll basically be half of
What we have.
what people are paying right now.
And that's a pre-COVID rates.
Yeah.
That's a normal rate.
That's a good rate actually,
That's a
because
good
I bought my first place 20 years ago and it was 5 points, and that was like okay. I was probably paying a little bit higher.
So this is why we are down to like a 2019 rates.
Yeah. So it's normal.
Normal.
Because 2019 was a normal real estate year. Like there was no COVID, nothing weird happened in the world.
That was normal year.
Was even
all
year.
of 2019 was
Yeah.
was a good rate,
Yeah.
good market, and everything was stable.
Yeah. Awesome.
Not craziness, not low end. It's a balanced market.
Yeah. So, Varan, if somebody is looking right now to do a purchase or is looking to move because they're having a renewal come up or they're refinancing, like what is a way that they can get a hold of you?
Just call me straight. My cell phone number is 905-999-7193.
All right, cool. And we'll have that up. Any final thoughts before we wrap this up?
If you're on the fence, I think we're on the tip of the iceberg.
Yeah.
Things are going to get expensive.
Yeah.
And rates are going to come down. When the rate comes down, the supply and demand shift.
Yeah, exactly. And we do have a lot of supply right now.
exactly.
So I think we'll probably start to see a shift happening in a little bit.
I think we are going to see the real shift in the spring market.
Yeah, awesome. Thanks so much, man,
Thank you.
for joining me on this.
Perfect. Thank you for having me.
No worries, man. And then, guys, like I always tell my clients already know this. People that contact me know this already. Some of you already do work with other mortgage people, and I'm honestly not trying to steer anybody any other way. I do have a lot of confidence in Varan. That's why I have him on. That's why I just tell people that, hey, maybe just give him a shout, run your scenario by him, and just see if there is a different option for you. So it's always good to kind of get a second opinion. Just like if you went to a doctor and something you didn't like to hear, you probably get a second opinion. I think these are a lot of like big numbers that you're dealing with. So if you ever need a second opinion, I think you should give him a shout and just run your situation by him.
Perfect.
I'm sure he'll be
Thank
happy
you for
to help.
having me.
All right, cool. All right, guys, thanks for joining us. If you have any questions, you can always send me a DM. My link to my calendar is going to be below. I always tell you guys, everyone's tired of me talking about real estate around them. I need new blood to talk to real estate about. So click my link, book an appointment, and I look forward to chatting with you guys. Until next time, guys, remember one thing: get Kabani, get sold.
Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.